Back to EDS, and in this video we're going to take a look at how you can write your own options contracts, collect a premium upfront, and generate consistent returns year on year. So first thing you want to do, open up your brokerage platform, pull up any underlying and get a list of expirations. We want to be between 30 and 60 days out in time. And we also want to be on a monthly expiration, not a weekly expiration. It doesn't matter what underlying is, we just need to pick an expiration date at this point and see where we are in the cycle. So the only date that actually fits that criteria is December 20th at the moment. So we know December 20th is 49 days out in time. So we can take that information, come over to our watch list, and filter out every underlying that has earnings over the next 49 days. This is so that we don't have a negative effect on our P&L. Or a better way to put it would be, if earnings was to disturb our trade, then that would have a negative effect on our P&L, most likely, especially leading up to the earnings event or the earnings announcement. There will be an increase in volatility. None of these things is basically good for our P&L, so we want to avoid it completely, and we also want to filter out everything that has a low liquidity rating level. And what's left is something that looks like this. This is just a pre-made watch list. You can use any watch list, it doesn't matter. I've got everything listed or ordered from high to low IVR. This is because we want to sell when volatility is high, and then play the contraction back down to the mean. So generally speaking, anything with an IV rank of over 50 is considered high. Anything with a rank of below 50 is considered low. And we simply just go down the list at this point and just see what sticks out to us. The first thing I'm noticing is United States Steel Corp, which is trading for just under $40. It's got an IV rank of 81 and an absolute IV level of 53.9%. If we just have a look at what that looks like on the chart, as we can see here, price has kind of been sideways for the most part. If we just go over to the trade tab and pull up our expiration date, December 20th, we can see here we've got a nice selection of strikes. We've got fairly tight, not too wide bid-ask spreads. And we can absolutely have a look and see if we can mock up a position. So the first thing we want to do is sell one call and one put. Where are we going to sell them? We're going to sell them anywhere from 16 to 20 deltas. We've got a 16 delta here at the 50 strike, and we've also got a 16 delta here on the put side at a 30 strike. So we've essentially created a $20 range between $30 and $50. And as you can see here, we would collect $2.26 upfront per share. So that would be $226 in total, and our broker is going to require $589 in buying power to open this position. So this is a very, very high return on capital trade for a naked position, very high. And we've also got a very high probability of success, 72%. Chance for probability of profit, and if you want to get out about 50% of max profit, we've got an 81% chance of being able to do that at some point over the next 49 days. This is a very ideal and desirable position to have in your portfolio, as long as you're keeping your portfolio diverse. This is definitely one to have a look at. The return is super juicy, $226 up front, and the broker is going to require just under $600 in buying power. Now, I wouldn't actually recommend buying any longs to cover your position in this case. There isn't really any need to, because $600 of buying power should fit in most portfolios. And if you are unsure, we've got a position sizing template here that's free for everyone to use and get a copy of. The way it works is you enter in the size of your portfolio up top, and then you enter in what the current VIX level is, and below that everything will then be automatically calculated for you. And as long as you stick to this and use this as the backbone of your portfolio, you will be just fine long term. No one move in the market will wipe you out. The link is in the description for this, and then once you click the link, click on free position sizing template, and it will take you to where you need to go. If you want to learn in more detail and see the behind the scenes of the positions that we're placing, how we're managing risk, how we're adjusting positions, etc., you can, again, link in description, and then you can click on EDS Premium. And then at this point, you can get yourselves signed up. And once you're inside, you will have access to all of our portfolios, where you can see the positions that we're making. Everything is in real time. Any adjustments and management that we're doing, etc., which is where the real skill and intuition comes into play. There is a full course inside as well, so no prior knowledge is required. We will teach you absolutely everything that you need to know. And it is a private community, so you can speak with myself directly or with other like-minded individuals. If for any reason you're not satisfied and you've been through our course and you followed some of our trades for at least 6 months, then we will refund you, or we'll work with you for free until you are profitable or successful. So it's completely risk-free on your part. And right now it is £1 a month to join. The price will be increasing. However, once you're in, you don't need to worry about price increases. You're locked in at that price level for life. So with that being said, I will see you guys on the inside.